Hey, Ruthie. I'm good, how are you? Good. Okay, well, I will send that to you because I just got it started. There is. There is, so I'm not sure what happened to the study and I emailed that one out. Go ahead and get started. Can't tell, do we have anyone on Zoom? Okay, I don't know, might just be the screenshot today.
All good.
Yeah.
So I have a listing, a call from one of our agents in, it's an estate situation. A sudden death, go,
I'm sorry.
and they, there was like a little note. Like about what you wanted, but I don't get to sign, so basically there's no will. So do they have to wait till it goes all the way to probate the property, or how does that all work, and what paperwork do I need?
Yes, so when it's a recent death, the estate does have to be probated or administrated. So if there's a will, it would get probated. If there's not a will, and he just has a note of what he wants, it's not a will. That's hopefully whoever, is in charge of the estate.
Yeah, it's a
Look at that,
Yeah. Mhm.
but, the court's not gonna honor that.
Right,
And so it would have to be administrated,
okay,
which essentially when you die intestate, meaning without a will, there's a set of principles on how your estate is gonna be divided. So that's how his estate is gonna get divided. Now, if he's got something written, then maybe whoever gets the division
Will
of
do it,
assets
yeah.
will do it, but there's no real way to enforce that. We can also do no administration necessary, so same sort of procedure that you go through, it's like through the probate court still. But essentially that says there's not enough assets to go through like truly administrating the estate. So
okay,
you get this order, no administration necessary.
okay,
It names the person who can sell on behalf of the estate.
okay,
If not, then you would administrate the estate. And if you're administrating the estate, what you're looking for are letters of administration.
okay,
And then the letters of administration function the same as letters testamentary. It tells
Okay.
the world who's gonna be in charge of the estate,
Okay.
essentially. And then in that document, there's a couple options on what the person is authorized to do.
okay,
So the judge needs to initial the section, I wanna say it's the third, but don't quote me on it,
Yeah.
but it's basically saying we give you all the powers under this particular code section. That's what authorizes the administrator to sell the estate or sell the
Okay.
property on behalf of the estate.
okay,
So I would just, normally what we see is all three options are initialed by the judge. But you wanna make sure that that code section is signed off on so that they actually have authority to sell. If they go through the administration process and you get the letters of administration and that code section is not signed off on, we would need a court order from the judge telling us who can sell, which
okay,
is gonna be another time consuming process.
okay,
I think like 90% of the time, they sign that last little bit, saying that they have those powers, but that's something that you wanna look for, and I can look at it when you have
right,
it.
right, I sent it to you, just
Yeah.
to make sure.
But it's worth mentioning, so that if it's not signed off on, it's not like a super surprise to your seller, and they can say, hey, they didn't sign off on this because X, Y, Z, and they're already kind of prepared.
Or how do they determine if no administration is necessary? Is there like, because he has real property, it's gonna have to have a.
No, because I've said no administration necessary for people selling a property,
Yeah,
so
yeah.
that's not the threshold, I don't know what exactly the threshold is.
Okay,
We have a probate attorney, and I'm happy to send you his information.
yeah,
He can
So
speak,
they-
to it. It's really an estate
even
attorney.
though they have a property there, so.
Yeah, having one piece of real estate is not
It's not
gonna
gonna be
preclude you
okay.
from
Okay.
that. Now,
So
I'm
they-
not saying they'll qualify, but I'm
Right.
saying I've seen it for people selling real property, so that in and of itself is not the.
So they would just have to go through the probate court and say no weapon, whatever, get the.
Right.
There, okay,
Right,
okay,
if they'll allow that,
if they'll allow it, okay,
but I'll send you Phil's information, because
Okay.
he can offer a little bit better guidance
Yeah.
on that.
I'm sure they're gonna do it right, but I need to make sure I understand before
Yeah.
I haven't really met with them, so,
Yeah,
I'm just kind of getting started, so.
yeah, if someone has passed away recently, the estate is gonna have to get dealt with through the court,
Right.
whether it's, probated with a will or administrative.
How long would that process take?
I think it really depends on the complexity of the estate and the county the property is in.
Okay,
Yeah, and the fact that the courts are still pretty backlogged from COVID. We're still,
yeah,
yeah, so I don't know, I mean, if it's like a quick and easy thing, it might be a matter of weeks, it could end up being a matter of months, it really just depends.
Right.
But I think he'll be able to give a little bit clearer timeline on that as well.
right, okay. And this,
And the other important thing on that is if they're selling on behalf of the estate, it's not like individual people selling it,
Yes.
which it is most of the time, it'll be the estate. They need to have a bank account set up in the estate's name, because we have to send proceeds to the estate.
and then they would just sign whatever administrator, what, how would they sign?
Yeah, they would sign
your
as an
name,
administrator.
But it's signed as an administrator.
So like I would sign Ashley Connor and then I would write the word administrator.
Okay.
So on your contract, on your listing
Yes.
agreement, the correct way to
Yeah.
sign and what you would have typed is like Ashley Connor as administrator of whoever's estate
Okay.
deceased. That's always gonna fit in that like tight
Right,
signature block line.
Okay,
What I tell people to do is write a special stipulation. Seller is Ashley Connor as administrator of, Bob Jones
Okay.
estate. Or the estate of Bob Jones, deceased.
so just the special step would say just the name.
Seller is,
Okay, seller is.
yeah, seller is, and then put the whole long thing.
Oh,
And then in your signature block, you can put Ashley Connor, administrator.
Okay, and then
that's-
I don't have to do.
Right.
Okay,
Right. And then you can do the same thing in your contract. When you go under contract, is write the whole big long thing. And then as a step,
as it's did.
seller
Okay,
is. And then you can just put the name and the capacity in the signature block.
okay, got it. That does seem. That
Yeah.
would work very well.
Yeah, those never fit. The contracts are not really set up.
I
to
see
fit
it just kind of written in pink.
Yeah.
Yeah. Okay, thank you, Charles.
Mhm.
Okay.
Every now and then, I think, no administration necessary, I've seen it say like just these heirs can sign. And so if it's the human signing as like their individual
Yeah.
capacity, you wouldn't need a bank account for the estate. But
Okay.
most likely you'll need a bank account, it just depends on how that document is set up.
Okay.
And if you wanna send it to me, I'll
Yeah,
let you know.
I'll be sending.
Yeah. Yeah, that's not a problem,
Yeah.
just a heads up that at closing, we have to send proceeds to our actual seller, which is who's on
Right.
title, which is likely gonna be the estate, not the people who will end up getting
Okay.
the money.
Okay, so when that happens, do they go ahead and change the, to the estate? Like, no, it's just in the name.
Yeah, it'll be in the deceased person's name. Yeah, every now and then we'll see it get changed, but 99.9% of the time, it just.
Yeah, they're not gonna do that.
No, it's kind of a waste of time. There's no need for it, no reason to do it, but that'll be who our seller is, because obviously the person listed cannot sign, they're deceased.
Yeah,
So,
okay, yeah, I wanted to like, make sure I had my ducks in a row, but I don't want to like say things that they don't need. So.
right, right. No, I'm with you, I'm with you. Yeah, but the bank account is a big one, because people get upset at closing.
Yeah,
When they
I
think
bet.
that they're getting money into their account, and I'm like, no, I gotta send it to the estate, I
Right.
don't have a bank account. Well, I guess you will tomorrow.
Right.
So sorry.
Yeah,
And we can cut a check and they can set it up after closing, it's just what I'm saying, it's not a fun surprise to learn at the table. So for you
you're
to
not
give,
walking down. the floor.
well, they can give them a bank account set up with the estate, I'm not saying I can't give them the money, I just can't give the wrong entity
Right,
the money.
right,
And so even if they don't have an account set up for the estate, I can cut a check to the estate and hand it to them. But
okay.
they're not gonna be able to do anything with it until they have an account set up with the estate. Because most banks are kind of squirrely about endorsing an estate check over to an individual person. They don't love to do that. So the chances of that occurring are low. Yeah,
Yeah.
yeah. Now they might be able to if they want to try it, knock yourself out, but it's better to just be
Yeah.
prepared and have the estate set up correctly with a bank account and everything.
Yeah.
And they do have to have a tax ID to set up the bank account, like they have to apply for a, like, tax ID for the estate to be able to set up a bank account. Yeah, I don't think banks will let you set it up if you don't have a tax ID.
And the tax ID for the estate, not the deceased.
Correct.
Oh, wow,
No, I mean, they can call their bank
yeah,
and ask,
yeah,
but most of the time you have to have a tax ID for the entity, sets the bank account for the entity.
yeah, that's true, yeah, I didn't think about that,
Again, that's bank policy.
yeah,
Most of the time, that's what they require.
okay. Okay. And I did wonder, this house is probably, it's not in the best area, it's in North Cross, but it's in like, it's in like 40. So probably gonna list around 300, so that is, I think just. Yeah, it's gonna be, I didn't even see it yet, so. Okay, no. Okay.
Well, the good news is they added all that language to the contract, to the brokerage agreement about hazards to protect you
Okay,
in the house.
okay.
So, because there've been quite a few lawsuits recently about
Like
like
people
people
walking
falling.
through, yeah,
So GAR's
That's
added
interesting.
language trying to protect y'all.
okay,
Just talking about hazards and how it's the buyer's responsibility to like be careful walking around the house.
that's good.
I mean, it's good to give notice, but
Right,
they were
yeah, there is,
listing agents being sued about hazards that they weren't disclosing, that they didn't know about, and it was a mess. So I don't know that it's perfect, but they're trying to combat that.
right.
That's one of the ways they added.
Yeah, I have no idea. Okay, thank you so much.
Yeah. So, thanks for having a question. We love it.
Yeah. Well, I was like, I gotta work on this, it's from Sharon Williams. Okay. See, go ask how this works, so.
Yeah.
Well, sorry, I'll bet you're.
No, we got a whole Zoom situation going on. I think Ivan said he was coming. He's not on duty, he's gonna be about 10 minutes late, so. We are good. Anything specific you wanted to touch on?
I mean, we'll talk about it at the meeting, we just got our ITIN product.
Oh, good. Good. I did know.
I saw that in your.
Oh, I'm so excited.
Yeah, so we got ITIN and down payment assistance, I'm still trying to figure out how it all works, so
Okay,
bear with us, but.
Yeah,
but you can do the ITIN product now.
Yes, you don't have to have a social security number, you have to have credits,
You have to have a tax ID.
tax ID, yes, you have to have a tax ID and minimum credit score is 660, maximum loan amount is $1 million, minimum loan amount is 100,000. And have to put 20% down.
Do we know if you have to own a property in your like home country?
That I'm not sure, they're releasing guidelines
Okay.
like this week, so that's why I say bear with me, I just got like a brief snippet of what the product is gonna entail as far as loan to value, credit score, loan amounts, I just don't know the exact in-depth guidelines yet. They're supposed to be released here
and
soon.
how is that connected, how is that important, all that, the owning property in their own country?
So really, the only reason I'm asking that is because I heard someone talking about a product and I thought it was shelter, but I could be wrong, that to qualify. Yeah, to qualify, you have to own your primary residence in the country that you're from.
I think what that
I
is
know.
we have the foreign investor product. Which like a
Is that what I'm
foreign
thinking
national investment product, so
But
foreign national is buying an investment property in the United States, they have to own property in their residing country.
That could be
or
what
wherever
I'm
their passport is.
thinking, I'm just mixing up the
Is it-
product.
Hey, Hunter,
Yes,
did you say 20% down?
yes, 20% down.
Okay, thanks.
Yep. So we'll have more information on that later this week or next week, but they're still rolling out all the guidelines, but for the foreign national investor program, they have to own in their, country of origin, so. That's probably where you got that from. Yeah, I don't know if that's the case on this ITIN, I don't think so. So I think it's for, people who are coming to the United States trying to buy homes that haven't established citizenship yet, so. I don't think so, but we'll see.
It's not for them to get a tax, I'm curious, just
Take a long time, I think, well,
Does it?
yeah, I mean, just anything with the government takes a long time, like, I know people that. I've talked to other agents who are like, yeah, I have somebody who's been applying for citizenship for I don't wanna misspeak,
Right,
like
right.
5 years or something, and
Yeah.
they're still waiting on paperwork to
Yeah.
go through and get their citizenship, so.
Yeah,
Yeah.
They have tax IDs.
Yeah.
To get citizenship. It takes a long time to get a green card too. Some of the people we were on the boat with yesterday, they just got their green cards, but it took 2 years for the application to go through for a green card, and then
Long
like,
process.
even longer for citizenship. But for the tax ID, that's different than.
yeah,
That's well,
That's
again,
easier.
that's quicker because the government wants everyone.
yeah, they're okay with you like
So
that,
they'll
tax
give
ID.
you- they'll give you a tax ID, they just won't give it's own messed up thing, but they'll give you a tax ID and not your citizenship yet, just so you can pay taxes.
Yeah. That makes-
So it's easier.
I figured it was easier, but I was like,
Yeah, it's kind of backwards, but anyway.
I do get questions on like who can provide those kind of loans all the time. That's why I asked.
Yeah.
So many questions about it, because I want to be able to be like, Shelter can do it.
Yes, so we can, but again, I just need to figure out the guidelines, because they're gonna be probably pretty strict, is what I'm thinking, because the max debt to income ratio is 43, I know that, whereas conventional is 50, FHA is 57 for us, so that's lower automatically, so it's gonna have to be a specific,
And
Criteria
20%
for
down is-
significant,
yeah,
so,
yes.
yeah, there's gotta be someone that has a lot of cash and makes a lot of money, or they're gonna buy a property that is well within their budget.
yeah,
Pretty much, but it's not gonna be anybody who can stretch their budget,
yeah.
so.
On, and not necessarily this product, but like in general, if people have to, if they're doing 20% down in the product, they're getting required 20% down, can they use some sort of like second mortgage or down payment assistance to reach that 20%, or does that mean that they're not actually putting the 20%
I'm
down?
gonna assume no, but, I'll err on the side of caution and say no, but I can find that out, I don't know the answer, so. It is a non-qualified mortgage product, so I don't believe that you can have a second lien,
Okay.
but I don't know if that's the case, you may know better than me, I don't know if non-qualified mortgages allow for a second loan.
I don't know.
I don't think they do, but I don't know the answer either, so I'll figure that out and get back, we'll have more information at team meeting tomorrow on that product, but.
That would be a popular tip. I guess that a lot of people are asking for that.
Yeah, definitely, and then, I mean, I don't know if the case on that product, but just as far as putting 20% down goes. I mean, if you have a client who is, let us know, because I've been getting a lot of appraisal waivers lately. I had one on Friday that closed with a waiver, one I was listening this afternoon that closed with a waiver. And I have one on Friday that closed with a waiver, so
Nice.
3 within a week with appraisal
What do
waiver,
you think's driving that?
30% down.
Oh,
Or more. I mean, if you have to put 20% down to get an appraisal waiver, but I also think that homes are appreciating higher than people are expecting with the market, because the inventory is down.
yes,
So just simple supply and demand, there's
okay,
not a lot of supply, there's a
Yeah.
lot of demand, because
Yes.
there's less supply, so prices are still going up. But I think if the house is priced fairly and properly,
Right.
then we're getting waivers, so,
okay,
that's
good.
yeah, I'm about to, after I get out here, I was just texting somebody, I gotta run and see if I'm gonna get one for 20% down on another property, but we'll see, so. Just let us know, we can run that through, but if we do put the address in the system, it is kind of a mess, we have to disclose the loan regardless, so I can't plug the address, and it has to be. Hey, we could get this, we're going under contract for the deal, not just a, hey, can you check this out?
Right, right.
I have to copy the file over, we have to send disclosure to the client.
You don't really know till the contract.
Not till it's accepted, but if there's a situation where it's like, hey, we're putting 25% down, we get a waiver, we win the contract, I can plug it in. But it's not one of those, hey, we're thinking about putting an offer on this, like, if you check, it's not.
Okay,
Because I have to disclose the loan, we have to show them all the, not that we're scared to show them all the fees and the rates and everything, but with the way the market is and the volatility, if I disclose a loan today and the market changes significantly, their rates can be different tomorrow. So I have to disclose it to someone today and the market changes and their rate changes a quarter of a point because of the difference in the market, then I look like I'm giving somebody a false estimate. Does that make sense? If we disclose it today and the rates go up by Thursday and I'm locking the loans, we didn't want the contract and their whole entire structure of their. Loan changes, it's a tough thing for me to be in the middle of, but. You have somebody who you think can get a waiver, because they're putting a significant amount of money down.
oh, that's
But I mean,
very helpful.
Yeah, it's a lot of people that are like, if they're doing a simultaneous close and they're selling their current residence, they're putting all the equity into the new home, I'd
Yeah.
say there's a 95% chance of get a waiver, because that's what clients are doing.
Okay,
They have a lot of equity and they're just putting 50% down essentially.
right,
So when that case happens, it's
It-
pretty,
probably.
pretty good chance for getting a waiver, yeah.
Which makes sense, because if the house is a $500,000 house and
Yeah,
the bank's only, or the lender's only loaning 250,000, all they need the house to be worth is 250,000 to get their investment back. That makes sense.
Yeah, the option, I think, for close, that's why.
Yeah.
So that's just a good thing now, trying to utilize this as much as possible, but that's great, it's a 14-day close, with 5-day due diligence, because we have the appraisal, I don't have to worry about it. Yeah, within that time period.
Yeah, and that's huge, because like simultaneous or back-to-back closes are one of the most, I think, stressful parts of the industry. Because not only, I mean, there's so many moving parts in one closing, when it all lines up perfectly, it feels great, but to ask that for two, it's kind of tricky, so anything that you can do to minimize that
it's always
transition.
nerve-wracking way.
Well, and that's also the issue with an appraisal waiver, because like they are moving from North Carolina, so I have no idea who the lender is, I have no idea who's buying their house. Their house closed last week, so it's all good, but if they didn't close on their house, they could still qualify for the loan, but they have to put 5% down, and they don't
Yeah.
have $300,000 sitting around. So in that off chance, like I had to let them know, hey, if you don't close on your sale, then we have to get an appraisal, and it's gonna be after it's expired. So you just
Okay,
need to
so
be
you,
aware.
so they would be on the hook.
Yeah, they're the ones who are like, hey, if you wanna utilize this waiver, we have to put
Right,
the 300,000 that you said you're going to put down, we have to put that down, we're somewhere close to, I mean, we adjusted the amount, they wanted to bring 300,000 just straight up to the closing table, so we bumped their loan amount up, and they still got the waiver, but they wanted to cover closing costs within that 300,000, so it's a wide range where we can get a waiver, but we can get it kind of,
okay,
So did they specifically wanted the waiver, so they didn't have to have an appraisal contingency?
we just did 5 days due diligence, no contingencies, this was already underwritten, so that we can get it back by Friday, it's one binding on Sunday, but I was like, we can get it back Friday if we need it. And then when I ran it through the system, I got a waiver, and so they're like, we don't want to order them.
How much is the appraisal?
If you rush it, so we're doing 5 day due diligence, we're getting it back within due diligence, it's 675, but a regular standard appraisal is 545. So we get like a 10-day contingency, it's just the regular, but it's 7 or less days they usually require.
you can get it.
Yeah, we can, yeah, I mean, if I were for today, I probably have it by Wednesday or Thursday. Yeah,
I didn't know you were doing that.
Is that a single rush or no rush?
if they rush it, yeah, I mean,
So-
any rush fee is just $150.
So that's cheap.
Unless,
That's good.
like, let's say that the appraisal company.
HOA would do let a rush.
Yeah.
Yeah.
Well, if they have, like, let's say the appraisal company has, 15 appraisals to do and they only have 5 appraisers in the area, then they may charge more money because they have to do extra, or I have
Right.
one of my fraternity brothers is closing on Friday in Alabama. And they charged him $725 because the appraiser had to drive 100 miles to get to the property
Oh,
in
wow.
West Alabama. So just different things like that.
That's still
Can't
cheap.
tell you that it's- Yeah, I can't tell you that it's for sure. It
Right,
could
right,
be
right.
$675,
But
but
it's
the rush, and
more, yeah,
that's what I see,
Yeah.
pretty standard at the rush fee. So,
but that's not that much if you can get it done.
well, $150 to win the deal.
That's nothing.
Makes a lot of
Nothing.
sense, especially in the grand, scheme, if you're purchasing $500,000, $600,000, $700,000 home.
Right.
$150 to win the deal, I think it makes sense, so.
For sure. If you have a waiver, can you still choose to get an appraisal?
Yeah, you can definitely get an appraisal, but if you get the appraisal, you have to utilize the valuation. It's not like you can get an appraisal and then we see the value and it comes in low, and then we're allowed to just say, we got to wait.
Oh, we're gonna just ignore it, yeah, yeah.
We can't ignore it once it comes in.
Once it comes in.
So that's how it works. So if you wanted to go on your own and say, I'm gonna order an appraisal on the side, not through the company.
Yes,
And I'm gonna do an appraisal waiver, you're more than welcome to do that. We don't have to see that valuation, but if you order it through the loan process, it's coming directly to me before you even see it, so I have to use it. Yeah, but we give them that information. So we're like, if you get it, you have to use it. But since you're getting a waiver, that usually is a good sign that we think it's gonna come in at value.
alright,
So,
I was just thinking for the people who need to sell to utilize the waiver, but, again, back to back is always sort of iffy, so like, if they don't tell them so qualified. For those people, it might make sense to have an appraisal so that they can get out of the contract if they.
Yeah, they were very confident it was gonna close, so it wasn't an issue, and it did close, so we didn't run into that, but that's just one thing that I would say to be aware of if you're going to get a waiver, yeah.
Just balancing risk,
Yeah,
what's scarier to you.
yep, exactly, so I just kind of let them make a decision, I can give all the information and then say, hey, it's totally up to you, here's what I recommend doing, here's my professional opinion, but at the end of the day, it's your decision.
Right.
In your opinion, is to roll with the waiver.
Yeah, oh yeah, I mean, if you get a waiver out of home.
Oh, yeah.
Save you money, saves me time, saves any headache of low price for any subject to. You know, appraisals that come in where they have to do a renovation or not a renovation, but they have to fix something in the
Right.
property.
Right.
It just gets rid of all the headaches, so.
How often do you see appraisals come in that require some sort of renovation or?
Not very many if it's conventional, where you run into the issues, VA is big
Yeah.
on. There's a tide, it's called tide water, it's where the appraisal comes in low, you can do a rebuttal. And we've now figured out that if the appraisal does come in low, their tide water, you can go one step further than that. You can actually challenge the VA directly, and they'll redo the appraisal, and we had a meeting a couple weeks ago, our company said there was a 65% chance that they do actually change the value if you go one step further. So
Wow.
that's something that we didn't have access to previously, that now, obviously, it's more steps, but if you're gonna go VA, that's just something to keep in mind, because we can not only do tide water, but then rebuttal and get on top of that. Because the appraisers are usually the ones who have an ego, they're like, I know what I'm doing, I'm not changing the value after you get the value. So I've never seen an appraiser get a rebuttal and change the value. So that helps go one step further if you're VA.
And there's less VA appraisers than conventional.
Well, so VA, the difference between VA and conventional and FHA is if we do a conventional or an FHA loan, the appraisers are our appraisers
Okay.
that our company has directly with DS Murphy. So we've had a relationship with them for 25 years. And if it's a VA appraiser or appraisal, it is not a VA appraiser.
That has
So
to,
it has to be someone who is a employee of the VA, or
Right.
I don't know if they're a direct employee, but the appraisal management group that they have contracted out from the VA, and they're way tighter on the values because it's the government lending the money
Right.
for the, value of the property, so they make sure that everything is buttoned up. And if there's any, like I had a VA appraisal come in, we ended up switching to conventional because it was just such a hassle. But we had a VA appraisal come in and they had to like redo the driveway because there was a crack in it. It's like just stuff like that, and that costs $20,000, which is like, it's not that big of an issue to the buyer.
Right.
The sellers have to come out of pocket $20,000, so it's like. Just that kind of stuff, it's just small, like if there's, handrails that are missing, and there's
Exactly.
handrails, they have to put the handrails in.
yeah, anything that's safety, they're
Yeah,
really
yeah,
big
and
on.
hazard, the steps are too steep.
Right.
The steps are too steep, so it's like just stuff like that, so. They're trying to cover themselves on any, insurance basics too, something like fall or.
Right.
A veteran who may be disabled or whatever the case may be, so.
Yeah,
They're a lot tighter, and then FHA is usually like, there's a leak in the faucet under the sink, that it's like small stuff like that, yeah. And then conventional, sometimes they'll make note like, hey, that's probably not on the inspection, but it doesn't need to be done to complete the sale. You would know more about, I guess, some of the things that need to be done. But then, you gotta get that done by a licensed contractor, you gotta get a receipt, we have to document the receipt, like, it's just a bunch of different things that have to happen to make sure that all goes.
Everybody's happy.
Yeah,
And I've actually seen it where it's the most stressful, and it's the conventional appraisal that comes back requiring something, because every now and then, it's not often, but every now and then, there will be a requirement on a conventional loan appraisal. And yeah, so it's kind of rare, but not rare enough to where it's not worth talking about, because if you get in that situation, both agents are really confused about whose responsibility it is to do what, and it is kind of confusing, because both VA and FHA, you're filling in the blank on how much the seller is willing to spend, or how much they're gonna be responsible for, I guess it's more accurate. And then if it exceeds that, then there's a mechanism by which the parties can either agree or the contract terminates. So if you thought you were, as a seller, you're like, sure, $2,000, and you need a $20,000 driveway, you don't necessarily have to do that. But as the seller, most of the time, it's gonna make sense to complete the repairs, because with VA and FHA, they stick with the property for what?
6 months.
6 months.
6 months, okay.
Yeah,
A long time, so you might as well go ahead and fix it, whereas a conventional doesn't stick at all, right?
correct. Conventional is just based on the lender's appraisal company, basically. So like if someone gets an appraisal, that's a conventional appraisal,
Okay.
and the list price is 500 and it comes in at 490, and you want to set an opinion for a different appraiser, then you can work with a different company.
Turn around.
Another appraiser, yeah.
Yeah, so there's not the same sort of,
But with FHA, VA, it's that appraisal sticks.
Well, so that, yes, but that appraisal sticks if the next buyer utilizes that same product type.
Okay,
So like, if
okay,
you get an FHA offer on your
Yeah.
listing and your listing's $300,000, like what you're talking about.
Yeah.
And the FHA appraiser comes in and says it's 290, then you can say, we're not accepting an FHA offer because the appraisal came in low, well, you would, as the listing agent, you wouldn't say that.
right.
You can just say this is not FHA eligible, or we're not accepting FHA offers, and then if you get a conventional loan, that comes in at value.
Okay,
I'm not promising that happens,
Okay.
again, it could come in at 290, but if you utilize an FHA loan for the next buyer, then you have to transfer that appraisal from the old company
From the
to the
original.
new
Okay.
loan servicer, and they have to utilize the 290 appraisal.
got it.
No matter who the buyer is, if it's FHA.
or even if it meets the value that has a requirement on it, the requirement stays, which is why it makes sense for those types of loans for the seller to just go ahead and do whatever. the
Because
market-
it's gonna
Or say, I'm not accepting that type of loan, kind
right
of
off
thing.
from the get-go.
Yeah, but with a conventional, it's confusing because the contract is not set up to say the seller is gonna agree to pay X amount of
Yeah.
repairs. And it's not set up for what if they don't wanna do that. So really, it's kind of the buyer's problem. It's not the seller has to. Now, if the seller wants to close with this buyer, they're gonna have to.
Right,
So it gets kind of sticky and tricky for the agents and the buyer and the seller, because they don't understand whose responsibility it is to do what, and then they have to kind of start from scratch and negotiate, where the seller has probably a little bit more of the negotiating power, because they don't really have to do it, but at the same time, it's never one of those situations where the buyer is being a jerk, it's not the buyer's fault or at all, it's the seller's property that has this issue that, the next appraiser may or may not find,
okay,
right? Because on conventional, even though it's not gonna stick, what's to say the next conventional appraiser is not gonna find that same issue? And I think the stuff that comes up on those are gonna be a little bit more substantial, because it's not the same sort of strict guidelines that FHA and VA have. So it's gonna be something that probably really does need to get done.
and then would that carry over to, if they found something, would it have to be worked on? Alright.
That's exactly right. Yeah, so now you know of this
So you
issue,
know.
even if you didn't know.
Yeah.
So across the board, most of the time, it makes sense for the seller to just go ahead
Sure.
and fix whatever it
It's
is.
gonna stay, yeah,
Yeah, because it's gonna be a problem for them, no matter what,
right,
no matter how they handle it. Even if the problem is just starting from scratch and relisting and saying it's gotta be a cash buyer.
But on that same topic, like if it is, for instance, like they have to repair the roof, not everyone has 15,000 extra dollars after doing the repairs. So some of these things can be paid at closing. So we can do like, if
out
it's
of proceeds of the-
correct, so like there's, and that's why it's nice to have independent partners in our office, like if you have a roof butler go redo your seller's roof. They can have it due at closing, to where if you're looking to give
Instead
like.
of trying to come up with,
Yeah, and there's a maximum amount of seller concessions you can give, so if the seller concessions is above that limit, you can just have the seller do it and pay it at closing. Because they're not allowed to offer that much money, so like if
right, right,
you do a 3% down conventional loan on $300,000 property, the max seller concession you get is 3%. So you get $9,000, if the roof costs 15 and the seller's like, I'll give you 15,000 in seller concessions, you can't do that, because it's too much money. So then you can just do it pay after, do that closing, and then the attorney would just cut the check to the roof butler.
okay, dumb question, so if they want to contribute more, that's like a red flag on the.
Which is not, it's just not allowed.
It's not allowed,
Yeah,
okay.
so if you put down anywhere from 3 to 9.99% on a conventional loan, you get 3% seller concessions. 10% to 24.99% is 6, And then 25% or more, you can
Oh, I
get
didn't know
9% of the purchase price and seller concessions.
Oh,
And then for FHA, it's 6%, no matter what your down payment is.
okay,
VA, 4%, no matter what.
okay,
Jumbo, I think, or investment properties, you can only get 2%. And for jumbo, I believe it is 6%, but I'm not 100% sure about that.
not sure.
Yeah.
I didn't know that.
Yeah, so there's maximum concessions allowed, so what happens is, like, let's say you're in that situation where it's a $300,000 house, your seller's like, okay, we'll give $12,000 in seller concessions above the limit,
Yeah,
then that money is just to waste the seller to keep it.
okay,
So you have to either renegotiate and drop the sales price $3,000 and then do 3% of 297, which is
Okay.
less than the 12 grand, so you have to finagle the number somehow. Or do like 3,500 off the purchase price, and then 3% of that would probably get you closer to 12 grand. But it's tricky on how to do it. That's why you gotta work with somebody who knows what they're doing on the lending side, because if you get 15,000 in seller concessions and nobody says anything, you get to closing and they lose 6 grand. Because it goes to nothing. There's nothing to use for it.
And I've had that happen before, where the agent didn't, or not the agent, the lender didn't tell them until like at the closing table, like they show up and, you know, we've got it, what the lender said, hey, this is what it's gotta be reduced to. We fixed it that morning, they walk in, they're like, where's the other $6,000 they were supposed to give? And that's not a fun conversation at all. So whenever someone calls asking, you know, the way to fix something, I'll mention seller credit, but always follow up, call your lender and make sure that there's room. Because really depending on what you want done, we can find a way to make it happen. Just the answer might not be seller credit. And so if it's, they want to give $20,000 because they love them to death, that's gonna be a problem, right? But if it's, they're gonna give $20,000 because they're gonna replace all the windows, well, you can figure out what that credit is gonna be, what the max credit is gonna be, but then also, you know, get a quote from Windows R Us. And just the amendment is seller to pay Windows R Us $6,000 at closing.
okay,
Done.
so that would go to Rick.
Yeah.
Correct, so that's not factored into that, like, amount given to buyer person.
Is that another thing that you run into that I see a lot is like the agent is working on in their buyer's best interest, so they're doing everything they can to get the maximum seller concessions. But let's say, you know, again, the $300,000 example, they're putting 10% down. So they can get 6% seller concessions, right? And let's say you negotiate and they get 6%, well, our closing costs do not total 6%. So we only have 3%. About 3% now, depending on when taxes and insurance are collected, it could be anywhere from 2.5% to 3.5% for price for closing costs. So if you get 6, there's another $9,000 that we don't have anything to do with. So we can either, there's a couple options. You can do a buy down, or it's either a permanent buy down.
Okay,
You buy down the interest rate with the remainder of the concessions that don't cover the closing costs. Or if there's an HOA, you could pay the HOA up to 12 months in advance. So if they have a, you know, $1,500 a year HOA, you could pay that off, and then you can buy the breakdown with the remainder of the money.
okay,
But what I recommend doing is making sure that you're talking to the lender, hey, what are the closing costs? Because if you get more than the, you know, closing cost total, then the client's either losing money, you have to buy down the rate, which in this climate of the market, I'd rather take $7,000 off the purchase price than pay $7,000 towards the buy down. Because the rates are gonna drop and they're gonna be able to refinance, so they're gonna lose out on that.
but that's what you like from the work.
Because if you pay $7,000 to change your monthly payment, $200 a month, well, that takes you 35 months to recoup that investment, because 200 divided by 7,000 is 35 months, that's 3 years about. So if they refinance before the 3-year period is over, they're not gonna recoup that full investment.
Okay,
So that's how we frame the buy downs to our clients. It's like, hey, do you really want to do this? Because you're paying 10 grand. I had the exact same situation this weekend. This guy's like, hey, I want to buy down the rate as much as I can. So I said, all right, I'll send you 2 estimates. One was 6.5%, like about at par. He's putting 30% down. And then the other one was 5.625 interest rate, which costs 3 points to buy down. It costs them $10,500. And it's gonna save them $200 exactly a month. So I was telling him, hey, that's gonna take you about 52 months to recoup, which is over 4 years. If you think that you can refinance by 2027, do not do that. And he's like, okay, that's a great point, I didn't understand that,
That's
so
brilliant.
he's then not gonna buy it down, I'm like, because we're offering to waive the lender fees on a refinance.
Right,
Saves you $2,000 right there, I don't know why you waste any money buying the rate down.
right,
It's-
yeah, right now.
Unless your goal is, hey, I have to have a X amount monthly payment and there's no ifs, ands, or buts about it. Okay, we'll buy it down, but, like I had a situation where they wanted their cash to close to be X, they wanted their monthly payment to be X, the appraisal came in $10,000 over value. We renegotiated the sales price up $7,000 to give them $7,000 in seller concessions, and we utilized that to buy the rate down. to the
That's so
point-
crazy.
to the point that they wanted it to be, to save them the money on their monthly payment, because they wanted to have exactly this dollar sign for their monthly payment.
Never think about going up.
Yeah, you can always, whenever the appraisals come in high, I always give my clients, I say, hey,
Never think about that.
you can absolutely up the purchase price up and save yourself money at closing, it's just gonna change your monthly payment X $100.
Yeah,
Be careful talking to your seller about that, because sellers who are savvy and paying attention will pick up on it, but you don't wanna look like you've misled the seller, because your commission's based off the purchase price.
that's right.
And so if you're gonna do that, and if the seller is willing to pay more on your commission, like, that's
Right,
perfect, and totally roll with that. But the way most of the time people present it is, it's, completely the exact same dollar amount for you, Mr. Seller, and that's not really accurate unless you revise the instructions to closing attorney, which you can absolutely do.
Right,
Don't put it in the contract, because then that gives the impression buyers and sellers can negotiate your money. which is
Right.
Not what we want, but most times, you're gonna wanna update the closing and the instructions of the closing attorney, so that it's, instead of, let's say it's 300,000 and each agent is getting 3%, right? So it's 9,000 and 9,000 total is 18,000, and you negotiate up to 310, so they can, or let's say 305, so they can get $5,000. Then instead of using the percentage on that
Okay.
form, you're just gonna put like a dollar, amount, put 18,000, sharing 9,000 with the other agent. That way you keep the commission constant, if that's what you wanna do. If you're negotiating with your seller and your commission goes up, well, more power to you, that's amazing. But then you can't present it like it's the exact same dollar amount for you, because it's not, because he's paying more commission unless you fix it.
Okay,
Right,
So good to just be careful in presenting that.
I'll play to that.
But it works, it's a good idea. And the other thing, while we're talking about closing costs, so if you hit the max with the lender, like the percentage wise,
Okay.
then there's, not a whole lot we can tack on to fix that. There's what Hunter talked about, but if you're not at the max for what the lender, like the cap, but there's just literally not enough closing costs, you can add just about anything related to the transaction. So like buying down works, paying HOA, like you said, works, but there's also other stuff, like maybe they really want to paint the entire house. Well, tack on like a painting invoice, get that, we can add that to the contract. So you can add costs to the buyer side to increase their closing costs, so that they hit that amount, and whatever the seller's giving them, there's actually costs that they can cover. So it's not just limited to the couple things that you're used to seeing, really any invoice that the seller would pay, you can put it on the buyer side, right, to eat up the cost, so you maximize it.
Okay.
Now, if you do that, you add costs to then utilize credit, your buyers at a break even, right, they're not saving any money, but they are saving whatever painting invoice they might have to go
Right.
pay on. So, presentation is key there as well, but you don't wanna lose out on seller credit.
Right.
Because, you talk to the lender and they gave you the cap and everything lines up, there's just not enough cost to
Right,
cover it.
right.
Find a
Use
cost,
it
there's
for something
always gonna be a cost to
Right.
add up.
Okay.
So that's definitely an option too.
Yeah, and it literally covers anything except for the down payment.
Yeah.
That's it.
Okay.
So you pay nothing
Thing
for the down
related to the
payment.
transaction,
Other than that, you pay for just about everything, those costs.
related to the transaction. You
Right.
can't be like, we'll pay 1 month of tuition for my child. Because it's all, it's gotta be related to the closing, but it's pretty easy to relate things to the closing, and it's pretty easy to find extra costs.
With a house, yeah.
Yes, there's always gonna be something that you want done.
Right, okay.
The basement needs the top of the line pool table.
Yeah.
I'm just kidding.
I would love that.
So can I say something? I thought that was the greatest idea about increasing the price to cover some of the costs that the seller would have to pay. But couldn't you do at the same time, a stipulation or in the amendment, a statement that says that the commissions would be based on the original price?
That's what I've seen usually whenever we do the amendment is they'll just do it. They'll add an amendment and say, you know, seller or buyer and seller agree that this is the new agreed upon sales price, commission is still paid based upon, you know, original agreed upon purchase price on X.
I've seen it done that way. I don't agree with that, because again, as soon as you put your commission into the contract between the buyer and seller, it becomes a term that the buyer and the seller can negotiate on. It gives the impression that they can negotiate on that, and I think that's a really slippery slope for you guys, because you don't want to go back later and say, well, y'all can't negotiate my commission. They're gonna say, well, we did on this amendment right here that you told us to do. What's the difference? And that's gonna, you know, you're not gonna have really a good answer to that. You can come up with something that sounds good, but they've got a point, and they're not allowed to negotiate your commission. So I think if you have someone who really wants to see it in writing, I think the correct place to do that is on your listing agreement. You can amend the listing agreement to say, you know, for this contract with these people on this house, the purchase price is this, the commission is this. You can do something like that on your listing agreement. That way you haven't, again, given that impression that someone else can negotiate your money that is not you. But
Okay,
most people do it wrong, and I see that, but I think it's a slippery slope, and occasionally I'll see it where, you know, agents will go behind the other agent's back, put together an amendment, have the buyer and seller sign it, and then the agent who wasn't like, you know, part of that discussion says, wait a minute, I never agreed to that. Then all of a sudden, it's a big mess for everyone who's involved in the transaction. So
Okay.
I wouldn't do that.
thank you. That was good information. Thank you.
Yeah, you're welcome. Do you have an HOA question?
Yeah, and I guess I thought I knew how things work, and then when I actually trying to think it through, so. HOA, I haven't had listening with an HOA, so they would contact the board, it's like a homeowner led thing. So they would just contact the board or whatever to get the numbers or letters or
We do
standing
that.
or.
You do that.
No, they need to do that for sure.
So I'm
Are
wondering.
you asking about like the home? Who are you asking for?
The
So the
HOA.
seller, so the seller needs, I mean, them to fill out the community.
Yeah,
Yeah.
she doesn't know the CAD, y'all are not gonna fill out
Yeah.
the
So,
We do get that and make sure.
yeah, so,
CAD. Yeah, and what
So they
you
would
guys
have
get
to
is
board.
different than what we have to
Okay.
order and get, which is not the same thing as what your seller is
Yeah.
filling out. So with the CAD, you're gonna say, you need to call the HOA, you need to figure out the total amount due from the
Okay.
buyer at closing.
okay,
Don't ask them to ask for transfer and initiation fees, because they'll call and ask for those two words, and then usually I'll have a capital contribution fee that they won't share, because they asked for the one words. Right,
Okay,
so
total
total
amount
amount
due.
due from buyer at closing, and then you wanna pad that a little bit. And tell your seller, hey, you're gonna fill in this blank with a number. If you come in low, you have to pay the difference. So you wanna make sure you call the HOA, ask for that. Ask the HOA if there is a management company, and call the management company as well. Even if you know in your heart it's HOA run, 100% of the time I would tell them, ask them if there's a management company,
okay,
and then call the management company and ask them the same question. Cause you could be 100% sure that it's HOA run, cause you don't know that last month they decided
I
to go to
signed up with
management
some of them, that-
Right, right, and if you give them the right questions to ask and the right people to call, you're golden, right? But if you don't tell them kind of who to call and what to ask,
Right.
they're gonna come back and be mad at you. But if you tell them, call the HOA, ask for total amount due, ask if there's a management company, if there is, they probably have fees, you need to call them and ask the same
Okay.
questions. If the HOA lies and says no management company, and then at closing, there is one, they're not gonna look at you and say, why didn't you tell me to ask? Because you did.
right,
Right, they're gonna be like, that darn HOA lied to me, and you're gonna say, that is so terrible, I'm so sorry, and you can like commiserate together, but none of that frustration is gonna come at you.
And when you say pad it, pad the number.
So let's say they call and they say, yeah, we have a $1,500 transfer fee. I might write $2,000 in that blank, because if it comes back that it's $1,500, there's no penalty.
Doesn't matter.
No, it doesn't matter at all.
Yeah,
Right, the only time it matters going so high is that you've gone so high, you've scared the buyer off.
Yes,
That's the only,
Okay.
so you don't wanna put like $100,000, cause any buyer's gonna be like, I'm not signing up for that. Right, cause they don't wanna pay $100,000 to HOA at closing, that will scare them.
right.
But I would get the number and then I would pad it. And by I would pad it, I mean, hey, Mr. Seller, you need to get this number and maybe tack a little bit of extra on there just to give yourself some cushion in case they change numbers, forget to disclose one of their fees, what have you, because no matter what you get from the HOA, if it's wrong and it's too low,
It
you
doesn't
will
matter.
pay the
Yeah, they
difference.
have to pay.
The contract does not care whose fault
No.
it is. On, it's, yeah, it's a seller liability. Right, which is why I also would not write one single thing on that form for your seller.
Yes,
Y'all would absolutely like send it to them, because, and I don't know how y'all do it as far as DocuSign goes, like. Most of the stuff you're typing in, that much
I
goes
don't,
type
nothing
in
on it but the.
anything. So I would just like almost send it to them and say, fill it in, send it, yeah, fill it in, send it back, and just give them the guidance on who to call, because you wanna be helpful, right? But you don't wanna fill it out for them.
And in our neighborhood, we have some non-members, we have civic members, and we have full members. This person's civic. And the board also wanted to know, like, okay, can we somehow let them know that they can join the poll for a certain amount, and where would that go? They'd love to convert them to a full active membership.
So
and disclose
typically,
the-
it depends on how the HOA is set up,
Okay.
because sometimes you're set up to where you're like grandfathered in, but the new owner's automatically gonna have to be mandatory or gonna have to be that high membership. Some of them, they get the choice.
They don't have mandatory because they figured out they couldn't do that, they couldn't force anybody. And they did have an extremely high, rate, it was like, we kept building out, that's like, $2,000 a year, or whatever, as long as the HOA was. So they kind of knew that, because there was a little or clause in there about, or if you cap it $2,000, and like, let's try for that. So, so would that go in the private
So-
remarks, or would I?
Yeah, really, the HOA closing letter is gonna give us that information.
Okay,
So your seller's filling out the CAD,
yes,
and the lender is using that, we're using that to like create estimates.
okay,
Lender is gonna have to order information, like if it's a
Themselves.
condo themselves, that's different.
Right.
If your buyer pays for something for the lender, for an HOA, that's not relevant to the closing, letter. That's a different set of information. We're gonna order the HOA closing letter, and that's gonna include that information on it. So at closing, or really before we get the letter, we're gonna say, hey, buyer's agent, it looks like for another $200 at closing, they can join the full membership. Does your buyer want that? They don't have to, let us know, because if they do, then we'll just put it on the closing statement. They don't have to go fool with it later.
so if they put it on that letter, here's blah, blah, blah.
The
this
HOA
option,
closing.
Yeah, the HOA closing letter, then it'll get communicated from. closing.
It should.
Okay, it should, okay, got it, that's really helpful.
Again, only if they put it on the letter. If they don't
Right.
put it on the letter, then,
Nothing, yeah,
but if they want to convert them, most of them do a good job of putting it on the letter. Or when they send over the letter giving us that information.
so I don't need to do anything as the agent.
No,
Yeah, okay, just let it cover the
Yeah, yeah.
letter, great, yeah, okay, that's very helpful, thank you.
Especially, when they're doing the membership drives, they're
Yes,
very active doing that, then they're gonna be trying to get a new buyer.
right, they're gonna be very happy to.
Yeah.
a lot of times, it's cheaper to join at closing than to go back and
Right.
join later. They want to incentivize, so it sounds
Yeah.
like that neighborhood might be one that
Yeah.
even incentivizes them joining.
Yeah,
And so they say like, you can, well, your initiation fee will be $500 less than otherwise would if you joined in closing.
Right,
They don't have to do that, there's no requirement, not all of them do it, but I have started to see that for HOAs who really want people to join or increase their membership type or whatever it is. So that should get communicated from the HOA, so that the buyer can do it at closing. I also think it's something that, once you're under contract, you could just tell the other agent, like, hey, this is probably not on the closing letter, but the HOA does allow for increased membership. If you wanted to reach out, I can pass along information.
okay, great.
That's an
perfect.
easy thing to add.
Okay. Thank you so much.
You're so welcome. have a closing at 11, so I am gonna move on out.
Oh, yeah.
But I appreciate you guys so much and let me know.
Thank you, guys. Sorry I was late.
That's quite all right. We're happy you're here. Yes,
You got it. Thank you.
Thanks, Hunter.
Thank you so much.
Absolutely, y'all have a great day.
Great to see you.
Send you guys.
That was so helpful. Thank you so much.
Now, this is great.
If y'all want a muffin, you have muffins.
Okay,
Okay.
I just worked out last night.
I know. Yeah, if you come just, every other week.
Yeah, yeah,
It's-
it's really
You
helpful.
learn a lot.
Yeah,
And you're hearing it from the top two people.
yes,
Get to hear. from.
yes, yeah. Don't worry. We'll move on the call too. so.
Cause you can ask other agents and some people's experience, we might say
Right.
one thing or the other.
Right, yeah, I wanted to hear from Ashley for sure before I talk to the seller.
But I noticed you were kind of running down about what's the limit
Yeah.
on
the
each loan?
Yeah.
Yeah, the
concessions.
closing cost, yeah.
Yeah,
Then, yeah, always ask your lender, they should know that.
right,
I mean, you know it now, but you. work
Yeah,
out.
yeah.
But those things change too,
right, right,
so ask your lender, hey, this is percent, remind me again, what's the most that they can contribute to, I mean, shit, with the con, like 5 or 6%, crazy like that.
okay,
That doesn't mean that they're going to. but they
right,
Can,
right. Yeah, these days, who knows what you're gonna get. But
Yeah, we're still in the seller's market, so.
Yeah.
it's not,
closing costs have not come into.
But then they do, I mean,
Yeah.
I don't know, but I've
But I
run
think
into,
now they can, yeah. for
I've
sure.
run into, right in the
Yeah.
seller's market, I run into that seller, paying closing costs, because they didn't want to fix things.
Oh, yeah,
They don't want to fix things, okay, how much is $10,000? Yeah, here's $1,000.
right. You just can't exceed, yeah. Yeah.
Well, cool, have
Have
the
a
rest of
good
your
day.
week.
Yeah, you too.
I think we're recording still. I try to shut it off.